And 3, 2, already live. There we are. All right. Happy Friday, everyone. It's Friday stream with Lunar Crush. We got Joe here. We got John. We're going to be talking today. We're going to start talking about some coins, but we are definitely going to get into a post-mortem on the Twitter hack, or as some are calling the Bitcoin scam. Although they don't call it if a bank gets robbed. It's not like the dollar scam. I thought that was a pretty interesting one I heard this week. And then, we're going to talk a little bit about inflation and how we think that's, what do potentially wealthy people do? How does that affect, the people that are less fortunate? So we're going to talk through inflation a little bit later, but I think we should just start talking post-mortem on Twitter hack. I mean, what in the world? It was like it came as fast as it went. It went as fast as it came. What's happening?
Well, I thought it was funny because I don't think we've ever had more coverage in a 24-hour period than what we saw. And it seems to be that the initial narrative that some of the media was trying to craft was that Bitcoin was hacked. And we both made sure, I think 5 times, 10 times on our interviews to say, no, Bitcoin's just fine. Twitter has a security problem. They have a security problem in the same manner that all SaaS applications have. If anything, Twitter has done more for security than 99% of the internet. The amount of money that these companies spend on security and roles and rights and policies and staff to manage all of that, it's just numbing compared to what most individual websites are doing. So
yeah, you kind of knew it had to be at the beginning. You knew it had to be some sort of social engineering, which is what they later, came out and told everyone, because I mean, the speed at which all of those accounts were taken down. I mean, the coordination of something like that, because almost instantaneously if you've been SIM swapped, unless you're sleeping. So your phone stops working, like it's happened to me before, and so it was like for them to be able to take down Apple and Kanye and Joe Biden and Uber, it was like, whoa, something serious happened. And it almost reminded me a little like Mr. Robotish, like they just got in, and whether or not they paid someone or whether or not they hacked in, I mean, it had to be social engineering.
Right. And I mean, look, we all have friends that have worked at some of these large social networks. There are individuals that have access that they should not. There's a centralized, few that control the keys to everything. And so this is a problem. This is a problem that crypto is actually meant to solve, and hopefully will. But I think there's a couple other sides to this story, and that's that, it's not that a lot of people haven't heard of Bitcoin, but if you ask a lot of individuals, how do I get Bitcoin? Can you send me some Bitcoin? How does that work? What's a Bitcoin address? You go back to like the 101 level, and I look at it. It's kind of funny. You look at those tweets that were coming out. How many people knew that that's how you send Bitcoin?
Yeah.
Like how many people know that if I just have that string of characters, that like if someone else can have it, they can just send me money. How many people knew it was that easy? A lot of people didn't know it was that easy. And so if anything, it's a big ad for Bitcoin saying, hey, if you want to send some Bitcoin, all you need is this address and you can just get money. And so I look at that as that's pretty successful, considering when we look at some of these accounts, they've never tweeted about Bitcoin whatsoever. We were looking yesterday at the Bitcoin influencers, and Kanye West was, in theory, even though it wasn't his tweet, the top Bitcoin influencer. He's mentioned Bitcoin before in interviews, and a lot of people are posting that, but he's never tweeted it. Just like we mentioned before, J.K. Rowling never had tweeted about Bitcoin, then all of a sudden did, and then she tweeted about Ethereum. And it's not positive or negative, it's awareness. This is all the stuff that the biggest brands in the world shoot for. They shoot for awareness. It's not good or bad. It's just getting the name on the tongue, getting people to think about it, getting it in the minds.
It's a good point, especially with talking about brands. Yeah, like I think life's tough media. Like you got it right. Like imagine imagine how much it would cost Coca-Cola to coordinate a tweet about Coca-Cola from Barack Obama and, Kanye and Apple and Uber all at the same time. Like, it would be an impossible buy. It was the impossible buy that cost no money. Right. And it happened, and then it's an awareness bubble. And yes, it goes up and it comes down, and I think we can show some stuff around that. But, the base level at which people are now talking is slightly up, especially from an audience and attraction standpoint. I mean, Lunar Crush is not tracking wallets, but it's, I would love to, outside of the social that we're kind of looking at, I'd love to go and look at, like, was there a, something not like a super significant, but a known bump, like an actual bump in addresses that were created and adoption of Bitcoin.
Well, I mean, the price didn't fall. I mean, we're hardly lower at this point, 2 days later. So, all that we really have at the end of the day here is a lot of awareness of Bitcoin. And this wasn't a Bitcoin problem. This was a Twitter problem. They could have done something much more terrifying, much worse. They could have, it's funny. The one politician that in the US here that we didn't see hacked was Donald Trump. And they could have taken over his account. I'm sure, no problem. They're probably terrified to do so because he would probably go crazy on them. But they apparently didn't think it was a big deal to take over Kanye or Obama or Biden or any of these other individuals, which is also an enormous deal. But, like, next time this happens, because it will happen again, it may not even be Twitter, it may be something else. I hope that everyone's learning from this. I hope that all of these SaaS applications that are built out there, social networks being one of them, I hope that they're understanding that it's not necessarily only a technology problem. It's also a policy problem. It's also an architecture problem where they've built these centralized systems that are, again, the keys are in the hands of a few, and they're not in the hands of the users. And the users are really just pawns in this game with their data bought and sold and traded. And we haven't cared. We haven't cared, and there's been no revolt other than maybe some potentially hypocritical advertisers holding back their Facebook ad spend, as an example. And we're seeing this lately, but it's kind of like, well, great, yeah, but they're still on Facebook. They're not removing their accounts. They're still there.
They're just delaying their buy.
Yeah.
I mean, I do think Twitter did a nice job with. I mean, it was about 5 hours before Twitter support came out and had like a pretty good answer to what had happened. And, Twitter, it's like they, whether or not they get access to their DMs, but, to put on like the tinfoil hat a little bit, do you think because they went after and did what they did, and, some people could call it like for the amount of access they got, was it the least successful outcome? It's, was that a little bit of a head fake, a veil, like, look over here while this other thing is going on behind the scenes with this admin tool? Or do you think, I don't know, I just feel like it was kind of like, well, why go after, I mean, obviously 130 grand is great, but when you look at that wallet, it looks like that wallet over time has been running scams like this, and they've made about $7 million, right? So it's like, obviously there were things that were more successful that they were doing that were not as publicized. What else could they have been doing with that admin key that potentially we don't know about? Like looking at people's DMs, like
whoever did this, this was a pretty dumb thing to do, because the reality is this is the equivalent of robbing a bank but stealing the minimum amount required to get to get life in prison, basically. Like, can you imagine? Like, they could have done many other things to make a lot more money. They could have pumped up altcoins and shorted them. like they could have done so many other things to make more than 100 grand. The other piece that I found interesting was one of those addresses was a Coinbase address. There's a couple different addresses used, and one was a Coinbase address that I read was used to transfer $11,000 a few weeks ago. And I'm curious even where that comes into play, because you have to KYC to be on Coinbase. So what did that KYC under? Was that under a fake account as well? Because I mean, technically that would have to hook into a verified bank account.
Did you always need to KYC on Coinbase, even in the early days?
Well, to have done this 2 weeks ago for what it was a deposit and then a sell, but for them to do that 2 weeks ago, I'll assume that they had to have something verified on there to do that. Whether or not that was the name of the hacker or it was, their mom or whoever it was, someone was KYC'd under that account. And so, this remains to be seen where this goes. But look, I come back to Bitcoin wasn't hacked. Twitter was. This was an enormous awareness campaign that, take the peripheral news that was written about this. Never would have been written to talk about Bitcoin even more. When we look at the, let me pop up one of our charts actually. You share my screen. I think you got those controls. We've never seen this activity, and yes, this is a 1 week chart, and it looks like it looks like a little bit shorter term on here, but like
it's
we've
crazy.
Never seen 138,369 social mentions in 1 hour. We've never seen social contributors break 100,057 in 1 hour. So those were individuals. So going back as far as we've tracked our data, we've never seen that. And then we've seen it fall and taper off, and it's taken a bit, it's kind of coming back. We got 5,000, these are hourly numbers. So 6,000, 5,000, it's kind of just tapered out. And so,
putting that in perspective from before though, the average is about 2,000 to 5,000 contributors a day across Bitcoin, or I'm sorry, an hour. Yes, across Bitcoin. And now we're talking 130,000 1 hour. So we're talking, 15 times the amount, or 200 times the amount of people, 150 times the amount of people that are on there talking about it. It's insane.
Right. And that's not to say that everyone's going to run out and buy Bitcoin because they saw a hack on social, but it's more of a macro level thing to look at. Like, is Bitcoin on the tongue of many people? How many people went home that night and say, hey, did you hear what happened on Twitter today? Kanye was hacked. Kim Kardashian was hacked. Barack Obama was hacked. Apple had their tweets deleted. How many people started talking about it? And that's immeasurable even. And so if a fraction of those people right now are starting to go, that's interesting. Let me go and let me research that a little bit. That is a big deal. And I say it's a big deal because, if we go back, let's go back on our 6 months here. And when you see that there's a couple things that have happened here, one, this was actually a big promotion from Cash App. This was the halving. Here we are. And so this was crazy. And so when we look at, and this is on a daily, so on the daily, we had 343,891. And just looking at this before, 30, 40, 50,000. When you go back, in fact, I'll go a year back. Let me take a second.
That also right there, that graph looked like somewhat of a sustained growth post halving in May.
It's definitely coming up. I mean, when you go back a year, we had 7,000, 8,000, and we were talking about Bitcoin for years. And so the growth is there. It's coming up, and these are all individuals on a daily basis. So it's coming up. But overall, I mean, when you look at this period all in here, I mean, sure, it's up. But we're sort of at this level of like, we need to start reaching out and getting more broad as an industry with who we're talking to. We have to speak to the general world that's out there versus blockchain experts. And we can't be talking about, we can't be talking about things that don't matter to normal individuals. We have to be talking about really more user experience and things that resonate with larger audiences out there, solving the problems of the world. And so I think it's just a little interesting to see, it took something like a hack to get such crazy activity to happen in Bitcoin. So I'll be curious.
You mean we shouldn't revert and get rid of all altcoins and everyone only buys Bitcoin from now on, and that solves all of the world's problems? Is that what you're trying to say?
Which is a completely different.
I do not want to go down that tangent today.
It's a completely different thing to say, Bitcoin only Bitcoin. Yep, that's right, only Bitcoin. I don't. At the same note, I don't think it's realistic to say that Bitcoin is going to solve all the problems of the world and all the use cases that blockchain and all these different things that are built to solve very almost narrow use cases. It's almost the equivalent, if you're talking about artificial intelligence, it's like saying, I'm going to build one engine for the entire world that's going to do everything. That's impossible. You build a lot of narrow AI engines that are very specific at doing specific things. You don't build one, like AWS doesn't have one AI solution to go, cool, let's solve everything. There's very narrow targeted use cases, and crypto is very similar to that. So it's not
like
better than the other.
It's not like a Joe Shabak where it's like, hey, I'm not trying to solve all these singular tasks. Like the task is recreating the human brain, which is like on a completely different, and that's why it's like the label artificial intelligence, I think was incorrect for a lot of the kind of singular level machine learning pieces that are happening. It's just was way too much. I do want to go back just a little bit to the Twitter hack. It's like, I did find it somewhat interesting that, these people were smart enough to figure out how to purchase and own Bitcoin. And maybe smart's the wrong word. These people were able to own Bitcoin. They were on Twitter, so there's already like a couple levels into like the ecosphere that you got to get those two things. Yet they still sent Elon Musk $1,000 expecting 2,000 back. And it's like, this scheme is not a new scheme. I mean, everyone's gotten an email from some sort of foreign delegate from some random country that says, hey, send me like $500 and I will send you 100 million back. Like, we've been getting those emails since like, you had AOL 1.0 and we're playing like Rabbit Jill's Casino. Like, those were things. But why are people sending? And I mean, there is part of it. I do see the veil of like, hey, it's only gonna last 30 minutes. And like, it literally is Elon Musk's handle. Like, the first thing, maybe it's like Elon Musk getting hacked was like a level lower than like, this is a real thing. But at the same time, like, wouldn't you think someone was somewhat facetious? I don't know. It's just like, it is an interesting thing to think that these people actually sent money, who also own Bitcoin, who also are on Twitter, who also follow these people. It's interesting.
Shocking. It's shocking. But, ultimately this comes down to an identity problem. Like, if your identity was owned and managed by you, there would be an entirely different outcome here. Like, if you had your identity and it transcended all of these social networks and all of these websites you use and all of the places you buy stuff from, and it was yours and you owned your identity, it wouldn't be something to like, in essence, like log into. Like, it's you, and it sort of just like goes across everywhere. It's almost like if you had it, it's almost like a level above a browser in a sense, where each website's not asking you to create an account and now you don't remember your passwords and you have a password manager with 3,000 websites and passwords in it. This is the problem, and it's inherent to the internet. It's inherent to SaaS applications. It's a never-ending challenge for every single site to individually solve. And the problem is, great, cool, Twitter. I mean, as if they're not going crazy right now trying to patch up whatever happened, right?
Yeah.
How many other sites are? None of them. Like, very few. and it's like, then there'll be another hole on another site. And this hole that just happened to Twitter, it exists on other sites now. And, you have to go back and say, this is an inherent internet level problem, not a Twitter problem. And
especially now with how remote we all are, and how, a lot of times there are some pretty significant business deals that are being done solely and independently online.
Yes.
And it's like, so what are you gonna?
We have Benny here asking for 1,000. His long lost Nigerian uncle has money.
Send 1,000 to confirm. That's exactly.
So wants to send
that's exactly what it was. Right. But it's like, for identity, it's good. Yeah, it's good. Why, like, how in this virtual world, it's like, so you're going to do a deal with someone, or you're here, you're going to have a partnership, and there's so much trust that needs to happen with a phone call or maybe a video conference or a Zoom. but you can't always verify. It's like, do you have to, it's almost like, if you're standing, suddenly you're walking by the president and the president's like, hey, yeah, we'll call your dad real quick. And we'll call someone. It's like, and then you call someone like, hey, the president wants to talk to you. It's like, oh, it's bullshit. Like, there's no way, it's like, you don't actually believe that that's the person on the phone. And so, for example, it's like, if you're, like Jack right now, it's like, how did he confirm? How do they confirm these celebrities and these icons? It's like, sure, they've got verified on their Twitter account, but like, how are they actually verifying that these are the people and that they were hacked? And then how going in the future, is there some sort of triage that happens when these hacks happen? And do you go straight, is it Jack Dorsey calling Kanye West and saying, hey man, like, I know it was hacked, like, we're fixing it. And how does he know he's actually getting Kanye, that he wasn't SIM swapped? Is there like another level of identity and communication that happens? It's like, sure, maybe he has his, his phone number, but it's like, was that changed? It's an interesting way to think of the future.
Right. It's also, again, has to be a level above all that. Has to be a level above the browser. Has to be a level that, if you own a house, your house is tied to that same identity that's you. If you own a car, it needs to be like tied to that same identity that's you. Banking, DeFi, like everything. And
yeah,
you've just got, there's the Joe identity, like everywhere, and you have different identities. And this is like, it's not to say that, like, well, then that could get hacked. It's more like, why do all these entities need so much information on you? And it gets real crazy when you think, like, you can sign up for a website. We've built huge websites before that have millions of unique users a month. And like, imagine there being an account on that website and all I get is your email. That's all I get. But in the background, I'm also getting, your approximate location. If it's on mobile, I can get your, like, real close, your location. And then I start to be able to cross-reference that with like a data management platform, the things that like Adobe has, for example. And I start to realize, oh wow, I can establish a full digital profile of Joe. All I ever got on my website was his email, but
right. Real estate records combined with GPS, latitude, longitude. I mean, that's how some of these third-party companies have more information than some of the larger companies, because they've commingled all of that data together and they get a super accurate picture of who you are and what you're doing. Even like mobile is a good example of, like, I think YouTube TV does a nice job of this, where it's like, you can't even use a VPN, because on the VPN, that doesn't mask your GPS location. And then they look at your GPS location to determine whether or not you're signing in from somewhere else and to give you access to that local television. So they've literally fixed it. And you can't mask your GPS location on your phone unless you're on an Android or you have a rooted device. And so it's like there's no getting out of showing what your location is, period, if you want to use large mainstream services.
Well, and you've also now got, there's listening software that's in some of these apps on your phone. What app you're using and when. Uber knows when you're using Lyft, and Lyft knows when you're using Uber, and where you are and where you typically go and how far you go, and when it'd be nice to send you if you're Uber, send you a promotion because you have the Lyft app open. So this stuff exists. And again, it boils back to this. There's this kind of identity problem that's missing beyond what Twitter does or what Facebook does. They're a website. They're one destination on this giant thing that has inherent problems. And
well, Crypto 1618 says, sounds like you're talking about Icon ICX Digital ID.
Well, there's a few of these. Yeah, sure. That's a good example. We could be talking about Icon ICX Digital ID. We could be talking about Digibyte has Digit ID. We could be talking about Blockstack that's built identity into their platform. These are all noble efforts. I think don't forget that EOS has Voice that they're building, right? The problem still ends up being, great, we have a technology solution. It's obviously not hard because everyone's doing it now. There's a lot of these types of things out there. There's probably 25 that we could find, or 100. The problem ends up being, what do you build? What's the fabric on top of it? It's really hard to build the social fabric of Twitter out. It's actually fairly straightforward to build Twitter. It's really straightforward. Like, in fact, like you could get a few buddies together and go build it. Might not be at the right scale, but you build it over time. The hard thing is, what is that architecture like? How do you build that social fabric to make people interact? It's the same thing of like buying a house. There's a certain protocol to how it works. That's hard to do. There's lots of technology solutions out there, but like this comes back to an identity that's there and built, but there's the proper UX on top of it, and no one's done that. No one's done that. It's a huge problem. So so it's fun. It's a fun thing, but I do wish Icon ICX Digital ID a lot of luck, because that's awesome. It's actually a great project. So we'll see. And dare I say, underrated for all the bulls out there. So
you want to pop into a couple more coins?
We could. Another thing that I wanted to chat about was, we were driving. By the way, I love Blue Bottle Coffee. So this episode is brought to you by Blue Bottle Coffee. So I think it might be owned by Nestle actually, but it's damn big. This morning, went for a walk. We're in Orange County. We went for, like, my wife and I went for a walk. Like, we drove to the beach and walked around Newport Beach, and I noticed, wow, like a third of the city must be under construction right now. Like, the homes that were already millions of dollars are being upgraded to millions of dollars more, because apparently it wasn't nice enough. It's shocking. In the middle of a pandemic, we talk about people that are barely scraping by, horrible situation for a lot of Americans, especially because the cases are out of control here. Our family's been distancing like crazy. Like, we're staying home, except for going out and getting some exercise. And it's fascinating to watch what the rich are doing in this country right now. And I have some other friends in other nice places, and they say the same thing, like in parts of Los Angeles. And it seems to be that the rich are getting way richer, and there's a few other scenarios that are happening. And it's interesting to look at data and go, well, there's this number and that number and that number and that number. And it's another thing to go for a walk and a jog like we did this morning, and to just walk through the middle of, in an area where there's 500 homes and literally 200 are under construction, getting remodeled right now. It's telling. You feel it. It feels like rich Disneyland. And it's like, what do they know that others may not be seeing yet? Like, why are all the wealthy people remodeling their houses in the middle of a pandemic? And it's just striking to look at it and see it and go, well, maybe the math adds up, and maybe it's like, what, we hit 2.98% interest rates yesterday. That was the lowest, I think, ever. Endless money printing, and a fairly wrecked economy that's trying to do well, but everyone's at home, or a lot of people are. And it's just funny that you see that these people are putting literally millions of dollars in their homes right now. And it's a fascinating topic. I'm like, well, what do they know? Why do they see that it's just low rates and endless money printing? So it's an asset. So it's going to just keep going up as they print more money inevitably. But it's just fascinating. What are your thoughts, Joe?
Yeah. I think it's, if you talk to some people that are investing in whether they, they're just an individual that's wealthy and they ran a business, or they've inherited it and whatnot. I mean, these people are always investing, right? And it's kind of like what with Warren Buffett, it's like they're always investing in something. They're always in the market, and it's like when the shit was hitting the fan, at the beginning and the market was going down, and it kind of bottomed out and started to kind of come back. And you hear the talking heads on CNBC talk a little bit about being in all cash, right? And when they say all cash, it's like you hear these guys talk on CNBC, and it's like they're like, man, like, Sarah, she's crazy. She has so much cash right now. She's like almost 10% cash, and it's like, wait a minute, that's all cash? Like, cause they couldn't imagine like 50% cash. Like that would, like, there's no way. Like they're investing in something. right? And so
Right.
right now you're seeing everyone saying, especially now with the money printing and inflation will hit, and it's starting to hit in interesting ways. These people are not sitting on cash. They're investing it back into their homes. They are putting it into, into tips. They're putting it into anything that they can that is outside of cash, because the ultimate experiment right now is happening with the amount of money that's being printed. And sorry, I'm getting a nice breeze right here and just knocking over my camera. But like that is what is happening. And these people are investing, and it's cheaper money than it's been. And it's not even just the individuals, it's the banks too. I mean, the banks are borrowing at 50 basis points. They're still lending it at 3%. They're extremely excited about that, because the business that's come through the door in the last 2 months for refinances and for even new home purchases is insane. People are leaving these cities, or they're trying to move into bigger places within the city if they have to work there. And they're just investing it, and they're going to invest it into things that anything outside of fiat, period. And that's where they feel safest. And so that's kind of the advice that everyone, and it's like we were saying, there's a couple of different ways that they can hold the poor down, right? It's raising taxes, because the rich people will find a way around that, right? And they're not going to pay it. They're going to move to a different island somewhere or a country somewhere. And they're still going to have access to the US economy because they have so much strength within the business that they're at. Or inflation. Inflation is a way to hold down the poor. And, it's like, so pick your, the worst of two sides. It's like, Donald Trump, love him or hate him, had an agenda, came into office and said, we're going to drain the swamp. We're going to get rid of these people, and we're going to change the way that this works. He absolutely did not drain the swamp. And he brought more people in that were like the original politicians. And, when they had an opportunity to raise rates, probably a year and a half, 2 years ago, and they should have raised rates to slow down the economy, and start to recoup some of the money that has been spent and the debt that was out there, he was getting upset and saying, we should lower rates. Like, we have to be competitive on a global scale, because Warren Buffett's going to go to Switzerland, or he's going to go to the European Union and get a loan versus coming to the United States and getting a loan. It's like, what? It's like, that's the competition that you're looking for. And they think that, they can out capitalist anyone that's out there and just grow the economy out of it. That's just not the case.
Right.
And so inflation starts to happen. And that's just a way where, like we're talking about, these hard money assets are now going to grow, and everyone else that's living somewhat paycheck to paycheck, all they have is increased food prices. They can't hold on to the cash that they get, because that's going to lose value so quickly. And it's just a cycle. And so we can't even say, like, the United States is probably one of the more capitalistic societies on the planet. And we can't even say that we're even close to that. I mean, if you look at even the current administration, which people would say is, as far right as we've been in a while, regardless of whether or not COVID hits, there is a decision to be made to print money. And the opposite decision could have been made, where they said no. And as unfortunate as it is, when businesses fail, innovation thrives. And so we started it in 2008, and it's like, I was listening to Peter Schiff on Joe Rogan the other day, and it's like, Peter said some really smart stuff. And whether or not you don't think he's got Bitcoin, I think he's got a ton. That's why he's in Puerto Rico. But he was just talking about it, like the way that inflation is affecting the poor, and it's a really smart way to kind of think about what's happening out there right now and kind of how to protect yourself. But rich people are going to find a way around it.
What's funny is, as this topic has come up all year long, from some of the biggest names in crypto, I find it really interesting that the next inevitable sentence after what we're talking about is, oh, and Bitcoin's going to 100,000. Bitcoin's going to 1 million, because you know what? Governments are printing endlessly. Do you find it really funny that Bitcoin is stuck? It's been stuck for weeks. And I'm gonna swap coins here. DeFi, not Bitcoin, but DeFi solutions have gone crazy. I find that real interesting. So it's almost like there's a search for yield versus a long-term store of value. People would rather on this short term have yield. And we look at these solutions, like we've got Aave up here right now. It's up in 6 months 1,182.12%. And so, when we've got these kinds of scenarios here, with Bitcoin during that same period of time, let's look at 6 months on Bitcoin. Bitcoin in 6 months has moved a grand total of 6.25%. At the same time that Aave has moved 1,182. So I find it interesting that as this narrative has kept going around, hey, your next thing you need to do, because the government's endlessly printing money, is buy gold and Bitcoin, and real estate also as a third thing should do really well. You probably want most of your nest egg in real estate because of all this cash printing is going to cause inflation. And so, wouldn't you know, I haven't heard anyone say, hey, because of all this backdrop, it's going to cause an altcoin rally. That's exactly what happened. And if anything, we're seeing the biggest gains since 2017 right now, on some of these projects.
Oh, absolutely, we are.
Like to point out, like Chainlink. This last week of Chainlink, and I'd throw Tezos into there as well, but we've seen a massive breakout. Chainlink is now $8.27.
Oh wow, it's already back up to almost 8.30. Wow,
8.27 right now. And if I just look at the last month, see, it's up 99% in a month. Again, like,
a lot of people have been holding too. There's a lot of people that have been rewarded for being all in on this from the early stages.
That same time frame, Bitcoin's down 2.8%, while Chainlink is up almost triple digits.
I think it's a little bit of what you're seeing in the stock market too, with things like Tesla and just excitement, and like inflation's going to be a problem. Sure, it's going to. To what extent? I think it's still TBD, right? Like, what if this experiment? What if we can print $1 trillion a year and nothing happens, and we move into the future, and universal basic income and everything else is out there, and for the most part, people are unaffected. What if that happens, right? I don't think that's going to be the case, but I still think in the short term, people are always looking for an optimism. And it's like with something like Tesla, where it's like Tesla, its market cap is now, I think, $380 billion. And you're looking at something like Ford or GM. I think it's like they're anywhere from like, I think 40 billion maybe, or it's either like 28 or 68. I think is in my head. I could be wrong, but like, is Tesla, from a capital perspective, even close to that, or an earnings perspective? I mean, how many times earnings is it trading at? But it doesn't matter, because it's the excitement of what the future holds. And it's like some of these DeFi projects, I think, are tapping into that same kind of stigma of like, this could be a insane future if some of these things go mainstream and people are starting to use them. And people are excited right now. It's like, this is where you're putting your money. Look at Reserve Rights, $69 billion market cap. Doesn't take a whole lot to move that up quickly. It doesn't take a whole lot of retail buyers to move that up quickly, where, even not from a Bitcoin standard, it's still a very small, like the entire, what we were talking about yesterday, the entire cryptocurrency market cap is still like $10 billion less than Tesla.
Yes. Yeah. Well, here's what's also another interesting thing here. We've had, in the entire history of crypto, there's been Bitcoin and altcoins. I would make the argument that DeFi falls into another bucket that has yet to go mainstream, in terms of people considering it something different. It's not just altcoins. And I say that because of like think of like the Tesla analogy, right? Tesla is looked at like, it's been looked at like as a car company, especially by other car companies, right? Tesla makes cars. We need to compete against them to sell cars. The reality is that they are as much an AI-driven software company as they are a car company. They are more an energy company than all of that combined. And so when you look at Tesla, it's not a car company, it's something else. When you look at these DeFi projects, they're not an altcoin. They are a platform to do something entirely new with, because it's in its infancy right now. When you think about what's happening, it's right now, it's on the hunt for yield. But that could evolve into something else, and then something else, and then something else that has way more inherent value than what we're looking at today. So what I'm wondering is, is the market starting to value these things as something else entirely? And so this will be really fascinating, because we are 6-7 months really into this big giant DeFi cycle. And so is it a bubble, or is it something new entirely that's in its infancy? So I'm
Right.
sure some people like, I'm sure Alon, who's maybe listening right now, would have a whole stance on this, and
Yeah.
Joseph. But like, I just wonder if this is the start of something new, because it's not feeling it. Yes, they're rising a lot, but there's a certain premise that's different here than the pump and dumps we saw in 2016, 2017. There's actually something new that seems to be in its infancy. So I'm really curious to watch how this DeFi space evolves.
Yeah. Could we still be at the beginning of the bubble though? Not even the bubble, the beginning of the rise, meaning, some of these coins in 2017 that did this, it was not like they did 1,000% in 6 months. It was like some of these were doing multiple thousands of percents.
Yes.
And, not that I'm saying it's going that way, but when you look at some of the early stages of these, it's like 300%, sure, amazing, right? Obviously huge risk to put a lot of money into something like this, but is there another 1,000 per, are we at the beginning of the uptick in this? Are people still just identifying and understanding the power behind how big, like, are these our new banks, right? Are these?
Well, look at history. Look at some history here. Go back to 2000, go back to the internet bubble, right? And pets.com and all of these things. And look at, a lot of these didn't have a viable product or anything in market at all. And this is a very similar thing with crypto. When we saw 2016, 2017, when we saw that bubble, there were projects, like, I'm not going to say the name, but like, as an example, there was one that was like the Airbnb for crypto, and everyone was a whatever for crypto, right? And like,
Right.
And you actually start to read the white papers, and you start to read, like, you start to understand like their roadmap, their hypothetical roadmap, and you realize, wow, they're 3 to 5 years away from anything even hitting the market, let alone traction, let alone the right economic model for the token. Like, are they going to burn these tokens, or are they just going to inevitably print these forever? Like, is it endless? There's no supply cap.
Yeah.
You start to realize they had no, like, they're startups, and they had no plan. They had no product roadmap that was legit. Like, it was just a hope and a dream, and a huge spike and a cash out, and everyone else gets burned. But the difference now, again, taking a card from the internet, what happened in Web 2.0 when we had Google, Facebook, Twitter, Amazon, could keep going, Pinterest, it could keep going. Like, what happened? They had viable products with a viable audience that they went public, and over time they became the largest companies on earth. And like, here we are with DeFi, and we've got products that are in market. Is the UX perfect? Absolutely not. In fact, I even did a few posts on that last week. They have a UX problem in a lot of these DeFi products until it's fixed.
But they're a product, right? Like,
a product.
They're not launching, at least maybe, I don't know, but it seems like most cannot launch unless there's a product, which is crazy to say. It's like, oh, of course, why would you even launch something if you didn't have a product? But it's like, that's where we were in 2017. And now is the next iteration of that, where at least people are saying, hey, I'm going to build something and then produce it. But it's kind of interesting. I was just thinking about, as you're talking about, like, Facebook, Apple, Netflix, Google, Amazon. And it's like, what percentage of the entire, like, S&P those companies are now? Like 40% of the entire market cap, and like 50% of daily trading volume comes from like those, plus like a Microsoft maybe, which is insane to think about. But isn't it crazier to think about that a couple of those, like a Google or a Netflix, those came in 2004, 2008, kind of out of this Web 2.0 of what you're talking about, where the ones that were there a little bit before, even Amazon, to a sense, the ones that were there before were like a Microsoft, and an Apple was around for a long time, more like hardware oriented, but still software oriented. It's like these new things. I mean, Google, Netflix, Amazon, like these are Web 2.0 type companies that are now legitimately the largest driving force in the US economy. And that was only
Yes.
20 years ago. And it's like,
Right.
if in 20 years, these companies can become the pinnacle, the driving force, maybe even globally for commerce, like what does that mean for some of these projects that are just starting today, which, yeah, some might seem crazy to some people, or some might not seem like they have, the legs to get there. But like we're saying before, like, sure, maybe most of the cryptocurrencies that are out there today are not going to exist into the future, but there are going to be more cryptocurrencies in the future than there are today.
Yeah, there certainly will be once the guardrails internationally are clear.
Yeah.
I mean, we've researched this space a lot, and there is no clear protocol for managing tokens legally, especially in the United States. But as this becomes more widely understood how to operate, how it's potentially part of a startup, how it's potentially you know financially administered, so it's a security or it's a utility token. As that becomes clear, yes, without a doubt. I mean, we're seeing thousands of coins in a incredibly cloudy environment right now. So just imagine once the guardrails are put into place and you know how to operate, and you're going to start some new company with some new idea, and you realize, gosh, if we had a token, it would work this way. As that becomes clear, yes, you're undoubtedly right. There's going to be a lot more tokens, a lot.
Yeah. And I do hope the ability for anyone to invest in the token and in the
Right.
in the ecosphere of some of these smaller companies, even if it's $10, even if it's $5. And it's like some of the rules and regulations put in place, at least here in the US, around, accredited investors, right? Like you could look at that one way and say, you know what, that protects people from, making it, getting burned. But it's like, why is the sole reason that you can invest in these things because you currently have enough money? Is that because you want to protect people versus losses and they can take a bigger loss? But it's like, why couldn't someone do on a percentage scale the same investment and start to at least gain some ground? It's like, it seemed from the outside, it does seem like a way to prevent people from investing that otherwise wouldn't have the opportunity because they don't have enough money. I mean, that's what it feels like.
It's honestly garbage. Like,
Yeah.
honestly, it's the worst rule ever. I've seen so many of these coins that go out to these accredited investors way early on that are like a 10th, a 20th, a 100th of the price that when they hit the non-accredited investors in another round. So these initial accredited investors have already made a killing getting in early. That is completely unfair. That is like that's ridiculous. Like, and that's the current model. Like that's okay. So it's holding people down is what it's doing, and it's completely unfair, and it needs to change. So, but again,
can you imagine if there was like a structure? Can you imagine if there was a structure in place where, like, if you wanted to start a business and maybe you started a token or whatnot, and but there was some sort of like structure in place where it's like, you need this video to explain it, you need the white paper, you need a prototype, you need to hit these certain things to kind of achieve the ability to raise, right? So it creates like, you need to do some work, right? It can't just be idea napkin, because there's a million people that are out there every day being like, oh man, that mop infomercial, like, man, I totally have that idea. Yeah, but you didn't execute on it, which that is the idea. It's like kind of like going back to like Zuckerberg and Facebook and MySpace and everything else. Like, there's a level of execution. Everyone else had that idea too. That was not an original idea.
right.
It's pure execution. But I do think that, even if you have some brilliant idea for a patent, or like the dissolvable casing on a vitamin pill, right? You still need to execute to make it happen. So it's like, if there was some way where you could get, crowdsourced $100,000 or $150,000, like something like a pre-seed round, that could, like, can you imagine the innovation that would come, especially at a time like right now where people want to work on something, but they like, maybe they are like, they cut hair and they're like the best barber in the world, but they literally can't do their job like legally. So they're like, what else? How do I innovate? Are people going to want to get haircuts in the future? Or is everyone going to just learn to do it at home? Is there a market there? But maybe they can start something else, a Shopify store or whatnot. And now you can fund that person, 50 grand, and they could live like, maybe the government matches it if you raise up to a certain amount. Like, oh my God, the amount of innovation that would happen is pure insanity.
If you could launch a startup with a utility token, and you almost treat it like a patent, or you treat it almost like it could be part of like your user experience planning that you're doing. If that were clear and thought through up front, it would almost become rare to see a SaaS-based startup not have a token, because it wouldn't make sense. And it doesn't mean they're building their own platform out. I mean, they'd probably be using other blockchains out there, obviously, like Ethereum or something.
Yeah.
But it's like, it creates, if there were better guardrails, it would create better thought through user experiences that would create greater adoption for each of these things that get started, versus,
yeah,
hey, let's build this thing, and hey, let's bolt on a token or a rewards program that's totally worthless. Or we've seen a lot of other applications that are out there, even competitors that we've seen that have tokens that rarely even use it, or they only use it for payment. And it's kind of like that's it. That, like, this is worthless. So
yep.
And some of these are worth tens of millions of dollars that we've seen. Like, it's just completely the worst executions, versus thinking from the ground floor. How do we build, like, tokenization, rewards, blockchain into all of our experience that we're building? You're right. You're going to get far greater innovation around these things that get built out. So versus, shoot, I'm afraid I'm not going to do this the right regulatory way, and the U.S. government's going to come after me because I didn't file this, I didn't do that. Like, it's just so ambiguous and ridiculous. Or
they're just going to drive innovation out of the country. And
yes.
and now that everything's remote, before that would be like a huge risk to say, like, okay, I'm going to risk everything. I'm going to move to this other, sovereign nation, and there's different laws there because I feel somewhat, unsafe. But now it's like, hey, if it fails, like 99% of startups do, that's okay, because now I can just pick up a job, at Twitter that's all remote, or Coinbase that's all remote, or all these other companies that are now set up for that work. Now you're going to lose people from even living in your country, right? And potentially moving to places that have lower tax rates, or are more set up to go after their second, startup in this space. And it's especially because I think the crypto space attracts so many brilliant people, and it attracts so many smart people that are looking for change, and looking to, change the way that they want to see the world, and they want to make their world a certain way. They're going to lose that. That's going to be a brain drain on the United States. And that's going to be a big deal for anyone that can't figure out the regulation around it. And maybe it's just too small at this point, even like it's just too early. Right. Mm-hmm. Or maybe there's way too many bank lobbyists out there trying to still push the narrative that this is an evil, bad thing. But like we said, there's a lot more dollar scams going on every day than there are Bitcoin scams, right?
There are. And with
so let's talk about Dogecoin.
I was going to say, I would love to make the world's smoothest transition right into Dogecoin after that whole discussion. And we promised some people, if you're listening out there, we did promise some individuals that we'd cover some coins. We asked on Twitter yesterday a few things. Dogecoin was actually one of those as well. So just like we've had some, I think I still get it up here, Bitcoin, some craziness with Bitcoin. We've had, I don't know if it's as crazy as Bitcoin, but Dogecoin's been really interesting the last week here. We've seen the TikTok frenzy go crazy with Dogecoin to $1. Okay. And I feel bad if you got in at 0.005. You're now down to 0.003. So this is exactly what a pump and dump looks like. We have, and let me add, we also get asked all the time, how correlated is social activity? Let me zoom in a little more on this one. And we see, how correlated is social activity to price movements? And we have our correlation rank, and we're looking at all of the various things: social volume, social engagement, price, market activity, and you can clearly see on here. I love it. Before it was, it's been moving anywhere between like 3 to even as low as 2.5, and then the campaign started. The groundswell of TikTokers going crazy, and wouldn't you know, right at where it made a high in terms of volume, in terms of social activity, and price, we were 4.8 out of 5, meaning that social activity was almost purely driving the price. And the social activity starts to wane, and it's just sort of the markets are kind of taking over. But this shows really just how crazy. I mean, it stands out like a sore thumb over time. It's the highest we've ever seen it. And you look at that social volume. I mean, we went from 730 Doge mentions per day to 36,102. Wouldn't you know? Shocking. We're back down to 1877.
It's like the Twitter hack.
It is. It's almost identical to the Twitter hack, and not to say that it can't pump again. It totally could. This coin's lasted more than almost anything out there because it's a meme coin. It's fun. It's the best like memes ever. But
meme coin.
This just goes to show how much social activity can pump everything. If we threw, I'd love to see a Tesla to Dogecoin correlation, because a lot of Tesla's like run is also socially driven. The communities behind this, obviously, it's an incredibly important company, but it is a socially driven company. There's a lot of correlation on that one, but yeah. Dogecoin really it illustrates what almost the anatomy of a pump and dump, what it feels like, and it also shows that some of these altcoins, you should know when to buy and sell. You should have your personal targets set. No one's going to tell you where it's going accurately, but you need to personally go, you know what? You might have been in here at 0.002 and gone, you know what? I might not have gotten in at the top. I might sold at 0.0025, and you just made 20 some odd %. Isn't that beautiful? Yes, you missed.
Yeah, and you have to know that that's a socially driven pump scheme. At the same when literally your insight and your tip came from a TikTok post, and you can even mathematically you can look at that and say, well, how many likes did it have? How many reposts did it have? Like, that was pump and dump, and it's like, people, the psychology around it that they did was, a 10% gain doesn't even feel on the same exact wavelength as a 10% loss, right? Like you got it. So when people are down, they tend to hold losers and sell winners because they think the winners are going to go down, and they don't let them run. And then they hold on to losers because they want to get their bag filled. And it's actually the exact opposite. You should be selling losers and you should be riding your winners. It's not just that's anything, startups, anything, just be riding what's working. And for some reason, it's just psychologically the opposite. I mean, I was like that for a very long time, and it's opposite. It's almost like the Costanza model. You just everything the opposite of what you're thinking. And it sounds crazy, but it's there's something to that. Jeremy wants to know why is engine, but Engine. I think he meant a J versus a G.
Yes, engine.
Which I was holding very early on.
I think is another interesting one here. So I've got a story. So one thing, I'm going to talk Doge one more point. I'm just going to say it's important to zoom out. It's important to not act mentally like I'm going to day trade 5 times an hour. It's important to know that's not realistic to do that, by the way. And no exchange is going to have all the liquidity and get you the right correct spread all the time. That's too much trading. Unless you're a computer and you're literally automated, you shouldn't be doing that. No one should. But if I looked at one day of Dogecoin, you go, okay, great. It looks pretty flat. If I showed you a week, it looks, all right, it's a downtrend, right? But if I zoom out and show you 3 months, you start to have some perspective. And the same thing could go to say, when I'm looking at every candle, I can have very little confidence on a one day what every candle's doing here. I can't do any solid TA on a one day. There's too much risk. There's too much variability. But when I start to look out and I start to, in fact, let's go 6 months, and I'm looking at daily candles over 6 months, even if I wanted to break those down even further, you start to be able to understand where you relatively are. And if you don't understand where you relatively are, look, everyone's traded bad, right? In the past, you learn. But if you don't understand relatively where you are, you're going to make the worst trades ever, and you're going to lose money. So I think I just want to make that point, and I want to make that point because on our Telegram, there's been a couple people that think we're giving buy sell recommendations. We are not. We are not making investment decisions. We are giving the community social insights. And there was an individual yesterday that said that they bought Engine because it was yesterday's coin of the day. And I want to make the point that they said, we lost them money. I'm like, wait a second. We didn't say where to buy. We didn't say where to sell. We literally said it was coin of the day. And they said it's going to take them forever to make their money back. And I'm laughing here because it's up 16% today. And
they probably sold.
Funny. They literally bought here, I assume. They bought here at 19 cents. Probably, I don't know if they sold or not, but they complained right around here at 17 cents and said, we lost them money. I'm like, you're kidding me. We didn't say buy or sell. And now here we go again. And so the only comment I could say is you must be new to crypto, because that's like an intra-hourly move on a lot of coins. Why are you in a volatile altcoin if that's the case? Hold your Bitcoin and be done and just hold it forever. But if you're trying to trade, things don't necessarily move on your personal cycle. They move based on market cycles.
Have you seen any specific news or anything come out of Engine? I mean, I see here that they have been added to Huobi Japan.
Let's take a look.
Which, like, listings normally, I mean, back in 2017, listings were like, it was listed now 286% in a day. But I do think that Huobi being a large exchange, Huobi Japan, Minecraft, gamers, I do feel that could be the next wave.
This would be it here. Engine enters DeFi with Aave protocol.
Okay, and Aave.
Yeah, so you can use it there. Now I'm actually really curious. What are they saying you're going to get with returns? There it is. Is it on here?
Maybe it's not up yet.
Oh, there it is.
Oh no, it is Engine.
Their APY.
They shouldn't be paying any.
I'm going to give Aave a UX recommendation. Lock your top row. We've had issues with that on our site too, but that's coming soon. Because now I can't see what am I looking at. So Engine 3.53, 0.8 APY. I think that's APY, yeah. So, hey, better than nothing. Holding it, right? So
that's a really interesting model. That's kind of interesting when you think about adding a coin that doesn't have any staking or doesn't have any sort of APR on there, to add that to your technically exchange or wallet, but now sharing. So someone wants the exposure to that upside of that particular project, but now they're kind of probably sharing and mixing the staking rewards cross coin. It's like, well, if I'm going to hold Engine, because I love the project, like I play Minecraft, like this is the best thing ever. And now I'm getting 1% on my money as well for holding it there. Right. That's a completely different competition. It's also, and like, I hate saying this, a slippery slope, because slippery slopes do end somewhere, folks. Like, just because you're giving, like, what was John Oliver's thing? Just because I'm giving my child a Twizzler doesn't mean I'm suddenly going to give him the whole box of Twizzlers. Like, you just get one Twizzler, which is, licorice. But, if these, like, does this stop Binance now from saying, hey, if you're holding Engine on Binance, we're going to give you 1.5%. And then Coinbase is like, well, maybe we'll give them 1.75. And where does that end? And are they getting squeezed for profit, or are there some nefarious people that are out there that might say, well, we're just going to lower our reserve requirements because US banks only need to hold 10%, but now probably it's 0. But right. Like someone like Tether, who's got technically, they say 75% of the Tether on hand, which is still much more than the United States banking system. Do they start to kind of whittle into some of that? I don't know. It's an interesting.
Yeah, it is. And there's so many projects with so many different economic models. Like I could throw Tezos out there, for example, and Coinbase will give you just over 4%. But if you use a lot of the other bakers out there, you'll get almost 7. I think I've seen a few little higher than 7 even.
Right.
Or you become a baker yourself and you make even more.
Right.
And then you think, well, great. So if I'm getting spun off 5 to 6% for just holding coins, cool. What can I do with that 5 or 6%? That 5 or 6% could pay my taxes on my house, so I never have to pay taxes again. I could reinvest it. I could, you start to have this whole next leg of, well, what do I do with that money? And it's just, it becomes a game of endless yield hunting, and always maximizing that. And on the one hand, you can like take that and reinvest it in crypto, but who says that it's even going to be crypto? What if I buy some sort of decentralized basket of real estate or something? You start to get into this whole
Or land.
or land, yeah. Or you get there's really a
Well, shout out to our friends at Fabrica out there.
Yeah, Fabrica was awesome. Which actually brings up the point. We were in Techstars 1 year ago today. We were driving 4 hours a day driving to Los Angeles, and
You should
being in
pull up
Techstars for 12 hours a day.
Fabrica's site so people can see it.
All right, I'm gonna do that. We'll give them a shout out. Everyone in Techstars.
We got to work on their SEO.
Fine carpets and rugs. Fabrica, you got some SEO to do. Fabrica.land. I see.
Yeah.
Choose land sales online, and you can buy with crypto, right? So I want to.
Well, I think they're building on Ethereum.
Yes, Santa Cruz is beautiful. Does that link? No. Okay.
But this is what's awesome, and this is kind of this is what we're talking about with like the next layer of DeFi is automatically putting this into some sort of commodity, like a commodity, which could be land, but some sort of diversified basket across these that is automatically being rebalanced, so it's not overworking, and it's just a piece of it. So it's like a couple of clicks, and now you could be invested in something that otherwise, again, only gave access to some of the the most accredited and most wealthy people. You can now get access to some of these things. So it's just an amazing innovation. I'm super excited for that next leg of what do you do with some of that yield, as people start to move a larger portion of their holdings and their net worth into some of these things. It's going to open the door for some pretty amazing products and give people a lot of freedom.
Yeah, definitely. Yeah, it's pretty awesome. And I think the big thing with all of them though is like as far as starting your SaaS-based business, how do you build this token alongside it to make it work and have this correct UX and economic model work simultaneously with your marketing as well? And that's why I brought up Travala.com, which is another one that we've had requested. And interesting site. So you can book your travel. They have their own token. Crypto is accepted. It's kind of like one of those natural things of like, man, where does this go? Where does this go? Does this go into does this take over loyalty and rewards points from the airlines if this were to be huge? Like talk about something that could immediately be improved on with blockchain. I mean, all those airline miles when people inevitably fly someday again, even though hardly anyone's flying right now. What does this look like in the future? And so this one's a fascinating thing. So in fact, I encourage everyone in crypto to check out Travala.com. It's pretty cool. Pretty interesting site. You can book your flights for cheaper and things like that. But we're seeing the community grow. And, if I looked at 6 months, in fact, let's go 1 year, and I averaged out, they were getting, we had, if I look at a yearly basis, it was only an average of 91 individuals per day. But if I just look at, say, the last month, now we're talking about 334 individuals per day. And if over the last week, let's see what we got here. Yeah, that's hourly. So, but if we're talking 334, I mean, this community is growing in size, and we're seeing that social engagement is also spiking up. So there's been an hour here, even this was one of the days, like almost 6 million engagements. And what that's looking at is like deeper interactions. Usually there's like a big story going on if there's that much engagement, and that's like comments and retweets and things like that. But consistently over time, we're seeing that increase, accelerate. In fact, to the point where over 6 months, there's been
Man, go actually look at that graph real quick on engagement. That previous spike,
this
one that was like, I think that's Feb 24, going back like before, all the way back to February.
I don't even remember what month it is.
See that spike right there? It's an interesting. It's like the price. You can see if you move the cursor a little bit, you could see the price starting to move. And then the big spike in social engagement. So there was some sort of engagement, some sort of news that came out, but that was almost like the second push. And then once that happened, but then the wind kind of came out of the sails a little bit with the social volume, you did see the price kind of move away. And so it's almost like that wave of optimism that's happening when this social engagement or news happens, a specific piece of news is happening, there is going to be a letdown with that much increase. Obviously, you don't know how long that's going to take, but if you do see this sharp downtick of engagement, you're going to see a lower in price, where when you're looking to the later stages, starting a little bit in the later months, you're seeing a consistent spike of social engagement that's happening throughout those next 6 months, which is keeping the news and the audience there. And it looks like holding the price up pretty well.
Yeah. I mean, it's also kind of, my advice to them, to every project would be increase your organic following. I don't know what these are, if this is big news and then it dies, and there's another big news and it dies, another big news and it dies. But, this does come back to UX. They have a UX on Trivala.com. They have, if you look at their customer journey, there's 1,001 interaction points that they could be having customers advocate for them. So I would advise them and every other crypto project that has, they all have a user experience of some sort. What can you do to create user engagement at all of those individual interaction points versus hiring influencers and then crossing your fingers and then that campaign's done? So you'd see stuff like rise and fall, or really like just waiting for the big news to pop. Like, always have people talking about you, always grow these things. I love to pick on it a lot, but like if I picked on Digibyte as an example, and let's look at their contributors, and let's look at a 1 year. So tiny a year ago, 100 people, 100 people, 100 people. And then we get into this like spike here. We're talking 2,000, 5,000, 4,000. And so this is not.
God, look at that market volume too.
Right, exactly. And this is not a campaign. This is organic, consistent community growth. And when we look at the price, it follows, right? I mean, and it's hard to look at a 1 year. You're going to see a very different number on 6 months, I bet, here, like a couple 100%. If you look at 3 months, it's probably even a little higher, or 160%. It's good. It's good for your price. It's good for your trading. It's good for your liquidity. It's good for your news, your social growth, or, and then the next time that a big story happens, something that's actually technically or engineering driven, you now have a giant community to advocate for it versus, okay, we got this big thing coming out. What should the campaign be? Which influencer should we hire? And it pumps and dumps. It's not, and then in between, it's crypto. It's not a publicly traded company. There's nothing there to talk about. Like, you have to have your community constantly going and going and going. So this is a much larger topic, probably for another stream, but it's just like, it's really important. I pick on it a lot. I think there's another.
Well, it kind of goes back to the product versus marketing, and it's like at some point, some of these larger companies, they hire a CMO, and they have these big advertising departments and marketing departments, and it's like, whether it's like a battle between product and marketing to like dictate the roadmap, and it's like, some of the argument is like, well, what if we just reoriented all of that money into just product alone, And it's like, it does look like, and I know we talk about car companies a lot, but it does look like traditional car companies versus a Tesla. Like, you're not seeing a Tesla Super Bowl commercial. You're not seeing, these tier 1 through tier 3 campaigns where, like, for people that don't know, tier 3 means like local car, like this is your dealership doing advertising, or, something local. And like a tier 2 would be like regional. So when you see like local SoCal Honda dealers, and then tier 1 is going to be kind of your broad-based commercials and Super Bowl commercials. It's like, you don't see that with a Tesla. You just see really good product, and it's word of mouth, and it's people talking about it. So we're losing you a little bit, John. I'm going to take off your kids are playing too much Fortnite.
I know, right? Did you see my post yesterday? My son was number 4 out of over 7,000 competitors in a Fortnite competition last night.
Holy shit. He's crushing it.
I know.
We gotta bring him on the live stream. Let's bring him on the live stream and interview him next week, although I doubt he'll want to do it.
We need to get our Twitch set up, and we'll have him manage that one.
Yeah. Well, cool, man.
I mean,
we are
icon. Yeah, I don't know. Are we is it working?
Yeah, we're hitting on the end here, hour 15. So yeah, let's wrap it up for this week. But thank you everyone for listening in. Maybe next week I'll have like some outro music or something. I mean, I don't know. We're gonna get licensing on some of that stuff. But no, really appreciate everyone. Have an amazing weekend. This will be posted onto YouTube. It's already probably, as soon as we're done, it'll be on Twitter. So appreciate everyone's support, and look out next week for some new calls. So appreciate it, everyone. Have a nice weekend.
Thanks, everyone.